Let's get back to Apple. Breaking news here, just resuming trade, and we're looking at some steep declines, down close to 8% after they revise lower their guidance for the first quarter. Let's get back to Kristina Partsinevelos, who's standing by at the New York Stock Exchange. And Kristina, I think they pretty much set the bar pretty low when guidance missed in their last earnings report card, and I guess they're just making it official at this point.
Yeah, it's a very detailed in regards to this entire this warning for their revenue going forward. I'm surprised at all the details, and what we're seeing here is that they're not only just blaming Greater China and the lack of iPhone demand over there, but they did said too there are other reasons impacting iPhone performance, including, again, consumers adapting to a world with fewer carrier subsidies, the U.S. dollar strength related to price increases, also some customers that are taking advantage of significantly reduced pricing for iPhone batteries and replacements. But overall, they are focusing on macroeconomic trends as well as the weakness in China. They alluded to the second half of the year slowing down and growth when it comes to China. They also said, too, that they saw fewer shipments. They said that they knew the strong, U.S. dollar. So let me correct that last statement. We knew the strong U.S. dollar would create foreign exchange headwinds. So that's adding to it. They said further other emerging markets, too, are seeing some weakness. So it's not just about China. You're seeing some weakness in some emerging markets like Brazil, as well as Mexico, Poland, Malaysia, Vietnam. So you have all this information coming, weakness in China, consumers changing their preferences and not upgrading as strong as they thought they would be. However, they were bullish. They said that they did see strength when it came to their services. Their services generated over $10.8 billion in revenue during the quarter. Again, this is growing to a new quarterly record. The company, Apple itself, in this statement, expects to report a new all-time high for Apple's earnings per share. So again, earnings per share is expected to come out. They're expecting an all-time high. Nonetheless, they are reducing their revenue guidance to $84 billion, and that's why you're seeing the plunge there.
Well, they've been touting their services for a while, and that's to make up, of course, for slowing iPhone demand. So if one part isn't working, the other part you try to make a little bit better. Ashley.
All right, well, let's bring in Gary Kaltbaum from Kaltbaum Capital Management, a Fox News contributor. He's on the phone to comment on this. Okay, so we have problems in China, Gary, with for Apple, a strong dollar that Kristina talked about, and maybe the upgrades to the models just not cutting it with the consumer out there, not only in China, but the emerging markets, and therefore iPhone revenue is the big reason for this shortfall. Your thoughts?
Yeah, and revenues are going to be down year over year. That hasn't happened very often. And this is also happening in a very fragile market to boot. I think Apple right now, if it trades right where it is right now in the morning, is going to lose about $55 billion in market cap.
Wow.
It's in the Dow. It's going to affect the Dow. It's pretty much the biggest stock in the NASDAQ 100. It's going to affect that. NASDAQ 100 futures are getting whacked. And it's also one of these growth beta type names. So all the beta stocks are getting hit, whether they have to do with Apple or not. Just keep in mind the suppliers have been cutting their numbers for 3 months now.
Right.
I'm not so sure this was unexpected, but the amount that they're cutting is pretty much on the unexpected side because just so you know, Apple's guidance has already been coming down over the last 2 months. This one, it looks like the final nail and should be an interesting morning for both Apple and a market that's already, as I said, very fragile.
So, Gary, this is a company that's seeing its revenue drop off on iPhones. People are hanging on to their smartphones for longer, and now they've got to pivot to the service side of things. Is that where the focus has to be now for Apple?
Well, it better be because, look, I think we hit a price wall with what they've been charging on phone. And also, you said it best, people don't need to upgrade as much as they used to want to upgrade in the past. And when you hold on it longer, that means sales are not going to be as strong. And 1 + 1 = 2 when it comes to markets. And we all know about markets and guidance on earnings. It's a beat-the-number game. And now not only you beat the number, but you miss it by a wide margin. And when you are Apple, which arguably is one of the big bellwethers in the market, it is meaningful.
All right, Gary Kaltbaum. Gary, thank you so much for taking the time to jump on the phone with us to talk about Apple. Again, guidance coming in a lot shorter for the first quarter revenue side at $84 billion. The original guidance, what was 89 to 93. To Gary's point, that was a bigger cut than perhaps people were expecting.
And also a product mix probably that didn't really spark that much interest and enthused buyers and, of course, some of the consumers. Since the cheaper iPhone XR, we had inklings already that it wasn't selling as well as anticipated. And also, by the way, S&P right now, we're looking at a drag from Apple. So if Apple's down 11 points, that's probably going to translate to an 81-point drop for the Dow tomorrow
Just by
morning.
Apple alone. And will this drag other companies, tech companies, down with it? Which tends to happen. So it could be a rough start to the day tomorrow on the Dow.